Hi everybody, Matt's Connor here with Connor Management Group, and we're here to look at another stock this week. And this week we're looking at a low price dividend stock to buy. From the page you see that the stock we're looking at is in the telecom services industry, and its 12-month upside potential we have as 30.5%. So clicking through, and we see that the name of the company is called CenturyLink. The ticker symbol is CTL. They're in telecom services, as already mentioned, and CenturyLink is located in Monroe, Louisiana. They're founded in 1968. They have 46,900 employees. Their ticker symbol is CTL. They're in the technology sector, and one thing not listed is they operate across 5 states. They have operations in Alabama, Kansas, Nevada, Texas, and Wisconsin. And they're the third largest telephone company in the United States. The annual revenue, the last trailing 12 months, has been $18.2 billion. The net income over the last 12 months has been $1.1 billion. Cash from operations, $6.1 billion, and their market capitalization is $19.8 billion. So they're a pretty large company. The full business summary description is CenturyLink operates as an integrated telecommunications company in the United States. The company provides local and long-distance network access, private line, public access, broadband, data, managed hosting, co-location, wireless, and video services to residential, business, governmental, and wholesale customers. Their website is www.centurylink.com. All right, so here's their products and services page. You can see how they offer bundled wireless and wired services, internet, television, home phone, some special offers. They also, provide direct TV service, through CenturyLink as listed. Here are some of their metrics. As mentioned, they're quite a sizable company. They have $18.2 billion in annual revenue, and their cash from operations at $6 billion the last 12 months. The trailing PE ratio is 19.1, and the forward PE ratio is 12.2. So the PE ratio coming down quite a bit tells you that there's an expectation of expanded earnings. The PEG ratio is at 8.9, it's a bit rich. The price to sales at 1.1, price to book 1.1, and the enterprise value to EBITDA at 5.3. So with the exception of the PEG ratio, the valuation ratios are pretty reasonable and somewhat low. Recent closing price of CenturyLink is at $32.92. Their 52-week high has been as high as $42.01. That was back at the beginning of the year, around February or so. And their 52-week low was $31.01. So, they're trading pretty close to their 52-week low. The 20-day moving average, is 32.12. The 50-day, 32.71. The 200-day is 35.73. So, that relationship with the 20-day moving average being the lowest, it's a declining relationship. Typically, when you're looking to take a long position, expecting the stock to go up, you expect to see you'd hope to see the 20-day averages being among the highest number, followed by the 50 and then the 200. Anyway, moving on, the average trading volume for the stock is 5.2 million shares a day. Definitely a heavily traded company. The beta is 1.73. They're a bit more volatile. than the S&P 500, the broad market. And they actually provide a pretty healthy dividend. The recent dividend yield is at 6.5%, and the average dividend yield for this stock has been 7.3% in the last 5 years. So we pay a very, very respectable dividend, and the average dividend payout ratio has been 70%. So as you can see the chart here, the price trend is overall, you'd say it's declining. Back in mid-February, the stock had a strong decline from around $40.50 to low as around $31. And the reason for that decline was that the company had reported that their forward expectation of revenues and earnings wasn't as high as analysts' expectations. So they had revised their forecast downward back in the beginning of the year, and the stock pulled back pretty strongly. But the good news is that we feel that with the current expected earnings, that there's a very good chance for this to be a strong turnaround story. So the financial statement quality of the company is good. It's solid. The profit margin trend is improving. The profit margin was 4.2% last year, and this year is tracking at 9%. So the price pattern trend is declining. I mean, if you look at it closely, it looks like it might be at a turnaround point right now. Overall, our model outlook is still bearish. Overall, we think that there's a possibility for a pullback. So maybe the stock will face some headwinds because of a broad pullback. We'll see. But at any rate, the recent closing price is at $32.92, and we see a 12-month price target of $42.97. So that gives you a 12-month appreciation potential of 30.5%. So and you think about it, it's pretty reasonable. I mean, the stock was as high around 41 earlier this year, and over the next 12 months, we see it returning to that level, if not surpassing it a little bit. And this is a nice story to get in on. I believe mainly driven because of overreaction early in the year. So there you have it. That's our assessment of CenturyLink. We think it's a nice opportunity sitting out there. Take a closer look for yourself. And as always, if you haven't signed up for our Saturday morning update, please do. You could be among the first to hear about great opportunities that you won't hear anywhere else, and you could get additional information about stock investing in general. These opportunities are all driven by our own self-developed proprietary algorithms, and we're new on the block, and we intend to show everyone just how good we are. So go to www.gmcstockpicks.com and sign up, and you'll be sure not to miss anything. And you can also just look for us on all the major social media platforms. You could find us on Google+, Facebook, and Twitter, as well as our videos on YouTube. So all under gmcstockpicks.com. All right, that's all we got for this week, and talk to you soon. Bye.